Okay, let's look at an indicator that you can use to start measuring this volatility and start seeing how we can use it to our advantage. And one of the real popular ones, kind of one of the long-time classic ones, is the ATR, or Average True Range Indicator. And it's really a way of looking at volatility, is looking at the averages of the highs and lows, so do this way, highs and lows over a period of time, which, as we know, is our trading range. Our high and our low is the range of our prices that are going in a trading range. And what we're looking for is range expansion, where the range gets bigger, or range contraction. So what's happening here when those things happen? So range expansion, as you know, if we start here and all of a sudden it starts getting larger or wider, it's expanding the range expansion from our low price to our high price. The highs and lows are getting further apart. And that's an indicator that volatility is rising. It's not trading in a narrow price range. It's now got a wide price range from low to high. So that volatility and that movement up and down between can be rising. Volatility is rising. Again, providing us higher reward with potential more risk, with a lot more trading options in between those highs and lows over a period of time. By the opposite of that, a range contraction would be your highs and lows are getting closer together, right? So volatility is reducing. There's less trading options or choices within a narrower range of prices. So again, that's where we can use this ATR to see a measure like, well, what is happening here? How volatile is the market, by looking at an average true range indicator that you can then, you can choose as an overlay on your trading platform. We automatically calculate it for you. So if we look at an example here, here's an example with Tesla. And you can see we have a line moving left to right. That's time, old time to newest time. And you'll see it's got a measure here. And this is looking over 14 days. That's a standard as far as 14 days. You can change that though, but let's say you're looking at a standard 14 days. And it'll give it a number, like this is 36.83 for Tesla at this period of time. It was 36.83. To give you a comparison, and this is a very volatile stock, right? We know Tesla is a very highly traded, highly volatile stock, wide ranges of highs and lows. If we compare that to, let's say, an Xcel Energy, which is a utility company, pretty narrow range of trading, that's ATR is actually more common, as an ATR is lower at a 1.40. So if you're wondering, if you're looking at a particular security and you're saying, oh, is this a real volatile security? Well, the chart will show you a little bit because you see these peaks and valleys, but you can also look at the numbers, the raw numbers, and say, oh gosh, regular old utilities like around 1.4, this is at a 36.8. Now you could compare that to, let's say, other stocks, like a technology stock like Apple or whomever, or Facebook, whoever you want to look at, in some are more volatile than others. Some are more volatile than Tesla, for example. So if we look at the top part here, that's our average true range indicator. And basically you can see the peaks and valleys as you go up and down, and how that kind of matches up towards the prices on the bottom. You can see we've got our candlesticks and we've got volume running along the bottom as far as our trading volume. So what is this telling us? Now let's look at this a little closer, and what is this actually telling us? So you can see over on the far, let's start on the far left, you can see that there's lower volatility, at least relatively low volatility in comparison to this stock. And you can see what's happening with the prices down below. They're not going up or down very much, right? There's not much, trading, there's volume's okay, but not super high, but there's not a lot going on there. It's a little steady, maybe a little bit downward, right? But then as our line starts to change, our average true range, our ATR starts to change and kind of start going up on the upswing, you can see that with the blue box there on the bottom, the range expansion, we're also seeing a definite price trend coming too here as well. Again, we're looking for when things might turn or how strong a trend is. So once it starts picking up our ATR, it's telling us there might be a turn happening. You can see the range is expanding up on the top there, but also our trend is now going up in the upper right there, or our trend is now headed upward too as well. And our volume picked up too, which is another really confirming indicator that something is going on here. And as we hit the top of that, that's where our risk and reward kind of comes from. You can kind of see it's, still kind of moving up. The ATR is still very volatile. And then the ATR keeps going up because the stock price actually went down, as you can see on this one. And our ATR is still showing a rising thing because it's still a lot of volatility, both up and down, right? So you have to kind of be aware of that a little bit too, as far as, maybe not using this as a prime indicator, looking at your other indicators too and the strength of those trends. And then it kind of peaks out there at the top, looks almost like a volcano. And we have this range where it's contracting, it's narrowing, it's getting less volatile over a period of time here. See how it's a little bit lagging indicator. It doesn't do it immediately. You can see, but over time, how that line starts to come down on the top to match up with that kind of narrow range in the yellow or orange type box where it's less volatility. And then again, it picks up with the range expanding again, and you start seeing more volatility going up there. In fact, you see a spike in volume there, kind of corresponding to a little bit of a spike in our ATR at the top, and it's all part of an expanding range there too. So you can kind of see how, volatility can give you some insight into this as far as what might be happening. Again, I prefer, or I would recommend that you're using this as more of a confirming indicator versus a primary indicator that you'd use, and you might use it with something else. The show, like, let's say I'm in the middle of that contracting, that narrow trading range there, and I want to confirm that I'm kind of in this narrow trading range, that there's less volatility. Well, I can look at that ATR and see it where it's coming off a peak, and I can see, yeah, things are getting less volatile. Might not have reached a turning point yet, and certainly not at a peak or anything of that nature. But I think there's better ones that we're going to talk about here, and one is the Bollinger Band. I think is actually more visually instructive and appealing, helpful. But ATR is very popular, so it's good to know about ATR and that average true range, and that can be very helpful as well. So I don't want to knock it. I just want to say I like this other one a little bit better to look at volatility. So let's talk about that.